Are you thinking about buying your first home in Toronto and not sure where to start? Here's 7 things that you need to know. What's up, you guys? It's Josh Tavares, licensed realtor with eXp Realty Brokerage. On our channel, we talk about all things Toronto real estate investing, personal branding, marketing, wealth mindset. Remember to hit that like button, hit that subscribe button, and jiggle the notification bell to get updates on your newly uploaded content. Number 1, down payment and closing fees. Question: do you know that your down payment is determined by the price of the property you're purchasing? In Canada, the minimum down payment is 5% with anything $500,000 or less. Any property from $500,000 to $1 million, 10% is the minimum requirement, and anything $1 million or higher, it must be 20% down. With the savings plan, you'll have a target in place and a strategy in mind to save up some funds so you can begin your journey to home ownership. This is important to know because the larger the down payment, the smaller the mortgage will be, which means smaller the mortgage monthly payments will be as well. Now on to closing fees. Closing fees are expenses that you need to finalize a transaction on the property, things ranging from legal fees, land transfer tax, and more. Typically, the closing fees are around 2 to 5% of the asking price of the property. Be very mindful that because you're living in Toronto, you're paying 2 taxes. You're paying a Toronto land transfer tax and an Ontario land transfer tax. It's also really safe to have some additional cash for once you move into your home to make any upgrades or changes that you feel best suits your needs. Number 2, get pre-positioned for financing. I can't stress how important it is to be pre-positioned before searching for properties. You need to be pre-positioned because it's a super competitive market here in Toronto to have an opportunity to get into the market. We've got many properties that are selling much higher than above asking with very little conditions. So because of this, you want to be pre-positioned in a way where you're ready to go and you're ready to close when the time is ready. I recommend speaking to a mortgage broker because with the mortgage broker, they have access to many different lending products, where if you're speaking to a bank representative, you're only going to have access to their products. Someone like a mortgage broker is going to go around shopping for the best interest based on the loan type that you need and that best suits you. Be mindful that because you are pre-positioned, it's not set in stone, you will receive that financing. And I say that because if there is big liabilities associated with the property you're thinking of purchasing, the bank may not approve the transaction, which means you may not be able to close, or you may have to get a different lending product that has a much higher interest rate due to the risks involved with that property. Number 3, make sure you can afford the home that you want. With buying a home, many of us have these lavish dreams of how our home can be, but we need to be super realistic as to the type of home that we can afford. When looking into homes, some things you need to be mindful of is your monthly mortgage payments, property taxes, any fees associated such as maintenance fees, utility bills, and of course your income as a whole. Do your very best to keep your costs super low, especially monthly with efficiencies, because that'll really add up in the long term. A great idea is to purchase a home that has potential for additional sources of revenue. Something like a duplex, a triplex, even a bungalow where you can rent out another unit or a basement to drive some additional revenue. When doing so, be mindful of zoning. And I say so because sometimes some folks will purchase a home and then they'll finish the basement, rent it out, and in the event that the city comes knocking for whatever reason, one of the units will have to be vacant, and that could really hinder your monthly expenses and your budgeting, so definitely be very mindful of that. Also, it's super important to work with a real estate team that has your best interests instead of trying to transact on a property so they can make a sale. Number 4, take advantage of first-time homebuyer credits. As a first-time homebuyer, you want to be well informed of some of the credits for first-time homebuyers. The homebuyer's tax credit ranges from $750 to $5,000 non-refundable towards your income tax. The Canadian government allows those with RRSPs to take out $35,000 towards a down payment, tax-free. Also, if you qualify, there are credits that go towards your Toronto and Ontario land transfer taxes. If you buy a pre-construction property, there are some warranties through Tarion that'll help you within the range of your first year, first 2 years, and 7 years. Also, there's a GST and HST credit, which works along for properties that are $450,000 and less. Number 5, check the strength of your credit. Your credit score will affect whether you can qualify for a home and the rate that you'll receive. I highly recommend taking different steps to strengthen your credit score to benefit you in transacting on a home. Equifax and TransUnion is a great source to check how your credit score is doing. I highly recommend that you keep all your balances low, Pay off your credit card in full every month and only use 30% of the credit that you have allowed. Do not cancel any credit cards, as that can go against your credit score. I also highly recommend checking your credit score periodically to make sure there's no suspicious activity. Number 6, pick the right property. When looking to buy your first home, you want to weigh out the neighborhood and the type of property. Property types such as condos, townhouses tend to be lower in price than single-family homes, but tend to have maintenance fees that could be substantial. An option is to purchase a property that's not turnkey, a little bit of a fixer-upper, needing some minor repairs such as paint, flooring, maybe some new appliances. That way you can save substantial amount, which you can use towards upgrades later on. And you also have built-in equity that you can use to refinance at a later date. Be mindful that fixer-uppers cost less per square footage, but involve more costs in terms of repairs, where a turnkey property involves nothing but just moving in your stuff, and there you go. I highly recommend looking into your long-term needs. If you're a couple that's planning on having a family, I recommend buying a larger property with more space so you can have for the family in the future. I highly recommend that when you're looking to purchase a property, to check the neighborhood out and make sure it's a good neighborhood for you as well as your family to grow, and you want to have many amenities close by as well. Number 7, home inspection and insurance. Home inspection is an assessment of many elements pertaining to the property, such as mechanical and structural. You want to make sure you have a very experienced inspector who can go into all the different neighborhoods and be able to provide you the best, most accurate report of the property to mitigate any liabilities. I can't stress how important it is to find someone who does a great job with the inspection. At the end of the day, you don't want to be left with something substantial such as a leaky roof, a furnace that may go out in a couple of months, or even a hot water tank that may flood the basement. So something to be very mindful of, and I highly recommend to go along with your inspector before closing to make sure the property is in tip-top shape and worth proceeding forward. Be mindful that when purchasing a property, your lender may require you to have insurance before closing. Home insurance will cover the cost of the property in the event that anything was to happen. So ideally, you want to have home insurance that'll cover the full amount, especially in the case where if there's any type of home fire, that means that the property may have to be built from scratch again. You want to make sure that your coverage allows for the whole home to be built back again. It also provides with liability insurance in the event that something was to happen, such as maybe someone slips and falls and hurts themselves on your property. It'll help cover those costs in a lawsuit and help you out. But of course, there may be some deductibles, some costs up front in order to have the insurance provider provide you with those funds. There you have it. There's the 7 things that you need to know when buying your first home in Toronto. I hope this video was super informative and you enjoyed it. Remember to hit that like button, hit that subscribe button, and jiggle the notification bell so you can get updates on our newly uploaded content. It's Josh Tavares, licensed realtor with eXp Realty Brokerage here in Toronto. Take care.